please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Mutual Fund Corner. I'm Mangla Malu. With me is Sumaira Abdi in the Mutual Fund Corner. We will toss to her in just a bit. But for the markets, the Nifty is comfortably holding above that 11,700 mark, closing in on that 11,750 mark as we speak. And remember, this is expiry week. So the bulls, they are believing that they can now defend the 11,700 mark as well. In fact, the 11,700 put, that one should come up for you, added close to around 23 lakh shares in open interest out there as far as the Nifty is concerned, and some of them are also aiming higher. The 11,750 put, that's the 11,700 put, 22.5 lakh shares added there for a premium of about 25 rupees, as well as the 11,750 put. There we have 43 rupees available for premium, so some bulls are taking their chances on that one as well. How this pans out is something we will watch out for over the next couple of days. But first up, all the top stories, and then we answer all your mutual fund queries. Record highs on the Dalal Street continue. The Sensex and the Nifty trade 0.5% higher, pulled up by the heavyweights Reliance, HDFC Limited and Infosys. Metal heavyweights like Hindalco, Tata Steel, Vedanta are also topping the Nifty charts. Mid-caps, however, underperform. Crude at 76 triggers profit booking in banking stocks. The Nifty bank trades near the low point of the day as inflation fears resurge. Fertilizer stocks, they are gaining in trade. Sources tell Network 18 that companies will now be paid subsidies every week, that instead of waiting for months earlier. As the August 27th deadline for resolution of stressed asset ends, debt-ridden stocks continue to remain under pressure. NTPC, on the other hand, gains after Bank of America Merrill Lynch indicates that NTPC could be a beneficiary as it could be appointed to manage these stressed power projects. Bharat Forge expects to clock revenues of 1,000 crores from its defense business in the next 2 years. Baba Kalyani tells CNBC-TV18 they are creating capacity to build the largest artillery unit in the world. Okay, with that, I give it away to Sumaira, who's joined with a guest. Sumaira.
Hi, Mangalam. Thanks very much for that. In fact, joining in to answer all the mutual fund queries that we're going to be getting in today, we have Anubhav Srivastava of Infinity Alternatives, who's my guest this afternoon. Anubhav, good afternoon.
Hi,
Thanks
Sumaira.
much for being back. Long time no see.
Indeed.
So let's get started right away. We have our
Absolutely.
first caller. P. Kalaswamy is on the line with us from Tamil Nadu. Hi, sir. How can we help you?
Hi, ma'am. Good afternoon.
Good
Actually,
afternoon.
I have a query. Sir, I have already SB small cap fund in SIP basis, and also the ICC Prudential Blue Chip Fund in a lump sum basis. I already invested. Now I want an additional investment in. I select a few funds.
Okay.
Can I give an exposure and your options for it? What was the growth and all?
Okay,
Mira,
so, and the time
First one
horizon
is
you're
Mira.
looking at is 10 years, right?
Yes, 10 years.
Okay, go ahead.
The first one is Mirage Assets Emerging Blue Chip Fund. Second one is BC Small Cap Fund. Third one, Axis Focus 25 Fund. Fourth one, FD Small Cap Fund. I select 4 funds. Any of the 2 I going to invest in SIP for 10 years.
Okay, and just to clarify, this is the SIP route over 10 years that you're considering, right?
Yes.
Okay. All right, Anubhav, you've heard his list. He already has investments in 2 of the funds. He's listed out 4 more, right? So first, what's your take on the investments that he already has? Are those good to go? And secondly, if he wants to begin a decade-long SIP, which of the 2 would you recommend or something else entirely?
Yeah, I think his choice of funds is okay. That's not a problem at all. And should he wish to get into a further 2 funds, I think with the exception of the Axis bit, the other 3 funds are okay, right? The other quick question that I would have for him would be, if you're looking at those kind of long-term investments, then you might want to start to diversify your assets out of equities a little bit over the 10-year period, because you are running a bit of an equity concentration risk on this. Yeah. Again, subject to what else you have, life stage, etc.
Okay, so Mr. Kalaswamy, I hope that answers your query. Up next, we have Avirul S, who's on the line with us from New Delhi. Hi, Avirul. Good afternoon. What's your query?
Yeah, hi, good afternoon. Yeah, so my query is that currently I have about 30% of my portfolio in fixed deposits and debt, and another 35-40 in bank stocks directly and large cap and mid cap mutual funds.
Okay.
So I was wondering, for the balance 30-odd%, where should I invest? And my horizon period is about 3 to 4 years.
Okay, so let me get that right. You have exposure to stocks as well, which is purely banking stocks. You have 30% in debt.
Yeah, that's fine.
Yes
Bank and HDFC Bank, yeah.
Okay, and now you have as well, over the last 2-3 weeks, you've picked up some large and mid-cap focused funds. Okay, so he has 30% of his portfolio so far. He has a concentration on banking stocks already. Therefore, where can he use the rest of his money? And the time horizon is just 3 to 4 years.
Right, so perfect. So 3 to 4 years is a reasonable time for looking at an equity investment. I think you want to start to add a bit of beta into your portfolio. While the large cap valuations are a little bit stretched, so Nifty you might want to wait for a little bit, but Next 50 or some mid cap index funds might be a great investment to add to this portfolio. 3 years, 5 years is good enough to do that.
Okay, Aviral, that's your answer. Karan Ravi has written to us on Twitter. He has investments in multiple funds. Okay, so I don't have the fund name, but he has, okay, no, I do have the fund names. DSP Tiger, DSP Midcap, HDFC Equity Savings Fund, ICICI Blue Chip. He has something in the Parag Parikh schemes, Tata Digital, SBI Consumption. It's a long list. Anubhav, you've gone through it as well, right?
I have.
Is the first advice to sort of consolidate the portfolio?
Absolutely.
And therefore, which are the few chosen schemes that he should run with?
Absolutely. I think what he needs to do even before consolidating the schemes, first figure out how much you want in debt and how much you want in equity. Once you get into equity, then how much risk do you want to take? How much in large cap, how much in mid cap, and then subsequently the small cap bits. Once you've got that mix figured out, start to get into just 1 or 2 funds in each of these categories. This list will be very, very difficult to manage as it goes forward. And as life goes on, then as I said earlier, diversify.
Okay, but tell me one thing, for somebody like him, and I know there might be many investors who are watching, who perhaps every time they want to make an investment, pick up a fresh fund. Therefore, how much diversification is too much diversification? And what is the ideal number of mix that you should have in your portfolio?
Right. So just to get into a little bit of theory behind it, see, when a mutual fund is just a container. Effectively, you're taking an exposure to underlying stocks, right? The portfolio theory says that 15, 20 stocks is diversification for an equity portfolio, right? Which means that if you have 3 funds, 30, 40 stocks is tops. Anything beyond that, you would have a problem with, law of diminishing marginal returns. Every time you add an extra fund to your portfolio, your overall returns might just about fall, unless there's a larger market trend. So, as I said earlier, decide on the categories. At best, have 2 funds per category, and with researchers like research sites like Value Research and all of that will give you a good insight into what are the good long-term performing funds. I mean, don't look at immediate performance. Look at somebody who's done it, done it all over a longer period of time.
Yeah, and Anubhav has been a fund manager in his past life. He's since moved on, of course. So, Karan, you'd want to take note of what he's saying. All right, up next, Naveen Nagpal. He's written to us on Facebook. He is invested in multiple funds. He wants Anubhav to assess his portfolio. So he has the Mirai Blue Chip Mid Cap, L&T Emerging Fund, Mirai Asset India Equity, HDFC Small Cap Fund, and all of these are SIPs for about 10 to 15 years. So how does the current portfolio stack up, and any recommendations?
Look, all of these funds are great funds. They've done a good job. The fund managers have been consistent with their performance, yes, notwithstanding what's happened to the market. So in line with the market, I would say not an excessive amount of risk as compared to the the indices they're following. So he's done okay. It's just that, that much of an equity overload plus the small mid-cap bets, somewhere down the line, you might want to get an advisor to look at your portfolio.
Okay, so that makes sense, actually. So for the moment, it looks okay, but get it checked up in a bit. So that's Naveen's query. We'll take a very quick break. There are lots more questions to answer. So we'll come right back to the Mutual Fund Corner. Stay tuned. Welcome back. You're watching the MF Corner. Anubhav Srivastava is here with us to answer the queries that are coming in. And our next caller is through to us as well. Anshuman Das is on the line with us from New Delhi. Hi, Anshuman. Go ahead. What's your question?
Hi, ma'am. Actually, I've invested in 4 funds.
Okay.
One is SBI Blue Chip Regular Fund. Another is Aditya Birla Equity Fund. And Mirror Asset Emerging Blue Chip Fund, that is for direct plan. And another is IDFC Tax Advantage. My SIP total is 13,000 per month. I want to increase 3,000 per month to 16,000 per month. So should I invest in a small cap fund like SDFC small cap or SBI small cap? Actually, I don't know because the valuations are quite high at this point of time. So should it be wise to invest in a small cap fund?
Okay, Anshuman, to start with, I'm glad that you have called in with this query rather than jumping in and then trying to figure out what you should do with your investments. But tell me one thing, you have some goals in mind for which you're making these investments?
Yeah, I have a retirement corpus of around 3.5 crore after 25 to 30 years. And I need 30 lakhs for my new house after 7 years.
Okay, Anubhav, two clear goals in mind. One is, of course, 25, 30 years away. And the next is 7 to 8 years, okay? So the 7 to 8 year goal requires 30 lakhs. The retirement goal requires 3.5 crores. One, with the kind of investments that he has, if they're scaled up by another 3,000, is he on track to meet these goals? And if not, where can he get that added alpha?
Right. So I think he should be on track to meet that 30 lakh goal because it's not a linear investment. Over the next few years, that investment will rise. Also, as you come closer to the end of that 7 to 8 year period, your risk on that 30 lakh corpus will go down. So you'll start to move from equity into things like debt and then subsequently onto the liquid side. Right. On the 25-year side, I think the information is inadequate to actually plan a portfolio out here. Just on that 3.5 crore, because you know, life stages change, what he needs to do changes, and subsequently, you know, what your exact requirement will be determined by that, not just the 3.5 CR number that he's looking at. And therefore, I think it might be a good idea to either get onto one of the websites which help you with retirement planning, or take the services of an independent financial advisor who will plan this out. Right. As I said, equity at this stage for him is fine. You can take that risk. Somewhere down the line, like literally divide your life into 3 parts. The first half is equity, second half is balance, the third half is debt. Right? And then that's how it needs to go on.
Okay, Anshuman, so I hope that answers your query for now. One is that try and look at your portfolio holistically and whether or not it's in line with your goals. The goal of buying a house for about 30 lakhs seems to be on track, but you may need professional advice for your larger goal, which is retirement planning. But congratulations on getting started and all the very best. Arvind Kulkarni is our next caller and he joins in from Karnataka. Hi, Arvind, how can we help you?
Good afternoon, madam.
Good afternoon.
I have invested in L&T Tax Advantage Fund Growth Option, 3,000 per month as a SIP.
Okay.
And I do have LIC Jeevan Anand policy, which is 40,000 per year. So first thing I wanted to know is whether I should continue with this L&T Tax Advantage Fund. And the second thing is I have additional amount of 2,000 to 3,000 per month. In which fund I have to invest, and whether I should continue the LIC Jeevan Anand policy, which I am investing in from last 7 years.
Okay, Arvind, so first things first, addressing your insurance queries is actually a little bit outside of the purview of our discussion, which is purely on mutual funds, but perhaps our friends at Money will get in touch with you to answer that query. But Anubhav, regarding the rest of his query, which is a balance 3,000 rupees, he's looking for a good fund. It's like a blank check. What do you write for him?
I think if it's a blank check, then just go into exchange-traded funds. Right, those are a little cheaper than index funds, but if you don't have a broking or a DP account, then you want to go into index funds. The only difference is index funds are a little more convenient to invest in. You can do it on a paper form, you can do it on a demat form, whichever one that you like. On the exchange-traded side, just buy it off the exchange. You know what you're getting into. It's beta, it's the market that you're investing in, no-brainer when it comes to equity investing. Right.
All right, Arvind, I hope that answers your query. Lyndon De Silva has also written to us on Facebook. He wants to know what you think of the HDFC Mid-Cap Opportunities Fund. I don't know why he's chosen this particular fund, but I guess this is something that a lot of people pick up. So therefore, is this the time to actually be looking at mid-cap funds? Are they back in vogue? Are they back making sensible, is it a sensible decision now?
See, one of my gurus of investing had told me a long time ago that always be a contrarian, so to speak. When the market is panicking, have a cool head. Logically, you should invest in whatever is down, and mid-caps are for sure down, right? You just need to choose well as to what you want to get into. If you're familiar with the funds, you like the longer-term performance, like the fund house, reasonable size, which means that it's not too small or too large, then you get into it. If you don't want to go down that route, just go around and buy some ETFs and you will be a happier person. Mid-caps definitely worth looking at right now.
All right, and we have Paras Narang as well. His query is on the Tata Consumption Fund and whether or not it's a good bet for the next 10 years. So I think he's investing about 5,000 rupees a month in it, or rather he's planning to start investing 5,000 rupees a month in it. Now, consumption is a theme that is doing very, very well and is getting recommended left, right and center. Therefore, for Paras, would it make sense?
So let me put on my investment advisor hat out here and tell you that valuations on the FMCG side and the consumption side are a little bit stretched. So you may want to diversify out of consumption. Again, you know, there's general market euphoria, but I think that might not last very long. Consumption overall for longer term is a great story for India as a whole. Therefore, definitely worth an investment for the long term. Right, so maybe diversify out for a little bit, get back into it, and so on.
All right, for Paras, I hope that makes sense to you. We have another query, actually. This time it is from Mukesh Chaturvedi, who's written to us on Twitter.
All right, while the mutual fund queries are being answered, they're live on Facebook. Meanwhile, there is some breaking news, and this is with regards to IDBI. Remember, IDBI had earlier informed the exchanges about their board's approval or boards not to issue 14.9% preferential issue to LIC. The street was worried earlier, thinking that maybe this is the final approval that they will do to the company, and LIC might not get majority stake, which is why we saw that decline on the stock. And then, since then, there has been a recovery ever since Lata has spoken about it. Lata, tell us more.
Well, nothing has changed about the deal. LIC will get 51%. But what the managing director, Sriram, told me is that getting that 51% stake requires a lot of approvals. RBI has to approve that LIC is fit and proper to own the bank. And of course, various other, they have stakes in other banks. So RBI's comprehensive approval is needed. CCI's approval is needed. The LIC board itself will have to do its diligence and then change the articles of association of IDBI because the promoter is changing. So IDBI also has to change its own articles of association. Since so much of legal work is left, by then, the NPA has gone up, the capital is needed. So in the normal course of the bank's business, it increases capital. That's what it has done. It has gone to LIC and placed preference shares and increased its capital so that business goes on. And meanwhile, the permissions will come. And when all the permissions have come, that 51% which LIC is entitled to own or has been asked by the government to own, the deal requires it, that will happen. So nothing has changed really. We don't have to panic and think that the deal is in the doldrums or anything like that. This is just to allow IDBI to continue with its business till all approvals are in place and the deal is finally fructified in the form of LIC getting 51% stake.
All right. Thanks a lot, Lata. That will calm a lot of the frayed nerves as far as IDBI shareholders are concerned. Remember, this is just first of many. This is 15%, and eventually the 51% to LIC will be done across after some approvals. With that, we'll take a short break. Come back. We focus on some more stocks, queries, as well as mutual fund related queries.